That's the global market action that, we are keeping an eye out on overnight as well. Cues that will be impacting the Indian markets. What is that we're watching out for? We have a team of researchers who's joining in with us this morning in terms of how the trade setup is looking like and the stocks that are likely to be in focus today. But first up, coming to you, Urvas, good morning. And what are the important cues that we're keeping an eye out on and need to watch out for today's day?
Good morning, Winnie, and it's a very important day for the markets, and I say that because both the Nifty and the Nifty Bank are at very important levels. And why do I say that? Because the Nifty ended at 25,100 yesterday. It is very close to last Thursday's high, and of course, once it crosses that, last Wednesday's high comes into focus as well, which is 25,234. Same for the Nifty Bank as well. It has closed above its 50 and the 100 DMA. That 51,800 level is where it has been finding resistance as well. It has not closed above that level since the 3rd of October. So both the Nifty and the Nifty Bank are at very important levels, but the problem with both of these indices is that they have not seen follow-up buying after a good day. But one stock that can do that today is Reliance Industries, and the reaction to the Reliance earnings will be a key determinant of how the Nifty moves in today's session. Some other positive factors coming in for the day is the fact that the handover from Wall Street has been very positive. The geopolitical tensions between Iran and Israel appear to be easing because the Washington Post reported about Prime Minister Netanyahu saying that he does not want to target Iran's oil and nuclear infrastructures, and as a result, oil prices fell. OPEC also cut demand forecast. So the oil prices falling is another positive. The cues for today, well, it's the financial services expiry since it's Tuesday, and since the Nifty and the Nifty Bank are at very important levels, they might take center stage today because of the Reliance earnings reactions as well. So, and stock-specific action would continue as well. Speaking of earnings reactions, HCL Tech, Angel One, Sterling and Wilson will also react to results, and plenty of other results as well, including HDFC Life, Bank of Maharashtra and others. So for now, the GIFT Nifty is indicating a sluggish start, but on the positive side for our own markets.
Thanks so much for that, Hormaz. But let's move on and go across to Vamakshi, who is joining in with us with those list of stocks that you should be keeping on your radar today. Vamakshi, good morning.
Well, good morning, Vinny. Let me first start off with Reliance Industries. The company reported its second quarter numbers. Revenue came in flat YOY at 2.32 lakh crores. The net profit, however, came in at 16,563 crores, much better than what the street was anticipating. Oil and gas business performed better than expectations, and Jio reported strong numbers supported by tariff hikes. Apart from that, HCL Tech is the next counter we're watching out for. CC revenue growth came in at 1.6%, much better as compared to estimates of 0.6%. Revenue beat in turn drove a 150 basis points quarter-on-quarter improvement in its margins. Margins came in at 18.6%. They also raised their lower end of FY25 revenue guidance at 3.5% to 5% YOY in CC terms. Suntech Realty also reported its Q2 business update. Pre-sales saw a jump of almost 33% YOY. Collections climbed up by almost 25%. J. Kumar Infra Projects also on our radar. They've bagged a work order worth almost 300 crores from Pune Municipal Corporation. Zydus Life and ICMR have initiated phase 2 proof of concept trial of desidustat in patients with sickle cell disease. Leica Labs has received product permission from CDSCO to manufacture and market pregabalin gel 8% in India. And lastly, keep an eye out on Honeywell because they won airfield ground lighting project for Noida International Airport.
Okay, thank you so much for that, Vamakshi. And finally, let's move on and go across to Nigel, who's standing by to tell us what should we be watching out in terms of cues in the world of FNO. Nigel, good morning.
Well, morning. Yesterday there was a big short covering bounce that played out on the Nifty Bank, and that explains why that index was the outperformer, because the index surged up and you had the open interest that came down by close to around 7%. What did the FIs do? Well, they lightened their positions on both sides. They unwound close to 7,000 long contracts. They covered close to around 7,000 short contracts as well. So there was some lightening of positions on both sides. How are they positioned now? 35% of their positions on the long side. Their net short, so close to around 65% of the positioning is on the short side. And we have been making this point. The FIs and clients, well, they are on two opposite ends of the spectrum. The FIs are net short, while the clients, they are net long. But yesterday, what was encouraging was the way the Nifty Bank closed. It closed at its highest levels we've seen all the way since October 3rd. And that's the chart that comes up for you on the screen. Every time it was going to around 51,500, 51,600, it was coming off the top. But in yesterday's trade, it ended closer to around the high of the day, which is very, very encouraging. Now, the stock to focus on will be HDFC Bank. Yesterday, it conquered the 50 DMA. It's very, very close to the 20 DMA. It needs to get past that. It'll give the Nifty Bank as well momentum. So that's the stock to watch. And with regard to Reliance Industries, Well, that one's been under pressure. How much of the bad news is in the price? So that's going to be important. And the other cue that we track today is the Nifty Financial Services Index, because that plays out the weekly expiry. The key levels to track, well, they're up for you on the screen on the Nifty. And as we mentioned yesterday, towards the final minutes of trade, a few stocks will go into the F&O ban and bang on. All three of them come up for you on the screen. Back to you.
Thank you so much for that, Nigel. Surely keeping an eye out on all those F&O cues. But